Welcome everyone to the CFO Swinger Watch Report technical analysis video for the week of January 21st through 24th. It's a very short trading week once again. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance in the upcoming trading week as usual, allowing you to cut down on the extensive research time that is usually needed to achieve a successful trading week. So make sure to join us if that is something that truly aligns to your trading goals. With that, let's get into the markets. So first of all, last week, obviously, we had a great bounce. There's a great pivot. All the technical analysis that I did on Sunday of last week and on Tuesday during the live stream absolutely was on point because, first of all, on Sunday night, as I've stated in last week's report and last week's technical analysis video, I said that SPY would be pivoting around this 574.50 to 575. Why? Well, the price seemed like it just wanted to fill in this this elections gap up area. And that's exactly what it did as it filled this gap up and much more. But after it did that, it quickly pivoted to the upside right around this 575 whole number level, and it continued to move up higher. Now, I was personally expecting to see a hit of 585 as a potential high for last week, but I was not anticipating such a rapid contraction in overall market vol, which allowed the markets to continue to rally up higher. And of course, we had a pretty amazing CPI report reaction that allowed the markets to gap up a lot on Wednesday, right? Last Wednesday, and this allowed the share price or the price here to go all the way back to 592 and much more, which obviously hit the targets that I stated in Tuesday's live stream. Now, with all of this in mind, there is something that truly concerns me. So the fact is that we've had such a great trading week last week as the markets literally did nothing else but move up. However, during this entire move from last week's lows to last week's highs, we still made a lower low, okay? And we ended up making another lower high. That's right. We have yet to see a break over the previous pivot high point sitting at this candlestick here on the daily time frame at the $599.70 high of the day print. So this is something that should be of slight concern because on the weekly time frame, it seems like we've had a potential bullish engulfing candlestick, but we did not get that because we weren't able to get past the weekly candlesticks high, which is again the same high at 599.70 here, and we ended up just a little shy, a couple cents off from that high. And so obviously we filled those parameters for a potential bullish engulfing candlestick by making a lower low. However, we did not fill that full potential for this potential bullish engulfing candlestick by not making a higher high pivot point. So with this in mind, okay, there's also another technical, indication that could potentially be warning us for another volatile pullback to the downside, and that is the volume. So obviously last week's volume was a slight increase compared to 2 weeks ago or even 3 weeks ago, right? However, there's one thing that is in particular bothering me, because even with last week's bounce, the daily volume bars that you see here are still not as great or big as the official big breakdown candlesticks that we had that eventually led us to this current 5% textbook pullback that we've had so far, right? Or textbook correction. So to me personally, with this volume, big selling volume that we've had, even just on the following day, on December 19th, after this initial harrowing day that we had, which was again the last FOMC meeting of 2024, we had a pretty large accommodating selling volume on just the day after the initial reactionary day. And so this selling volume alone still trumps the volume that we've had for all of last week. And so this makes me wonder, from a technical perspective, are we still going to see a potential downtrend, or could we still be in a downtrend even if the overall price had a nice pivot last week? So combined with the fact that we've had this volume issue, along with the fact that we have not made an official bullish engulfing candlestick due to the fact that we have made yet another lower high here, a lower high pivot point, I am still very much on my toes here, not trying to become complacent to this bounce, because again, like I've said last week, we could be looking for a dead cat bounce. And so there is a real possibility that we could be experiencing a dead cat bounce with relatively low volume. So this week, if we do see an official retest of 600, okay, that will officially give us that new higher high pivot point. But that could just be a way for the market makers to suck in any more late long-term buyers, or just simply people who have been bullish a little bit too late compared to being bullish at the lows here, and they can just completely use them as exit liquidity. And we can see price immediately rejecting to the downside once we do see that retest of this whole number level at $600. So if we were to move down this week, this short trading week, I will want to see this 592 level, or an area of 592 to 593 being held, because my daily 10 SMA has begun to curl up higher, all thanks to last week's price action. And if the price is able to uphold this 592 to 593 demand area, or as a new demand area, we should be seeing the daily 10 SMA curling up higher, continuously curling up higher, and eventually breaking over my daily 21 SMA, this light blue line, giving us a nice daily bullish crossover. So that will give us a nice short-term confirmation that yes, we are indeed in a new reversal to the upside. All right, but that would also mean that we would have to break below the daily 50 SMA, even though we closed over it last Friday and reclaimed it. And it would also mean we will have to fill in the gap that we made here from last Thursday to last Friday. All right, so that is a bit bearish, and it will give a lot more leeway for sellers in that perspective. But as long as buyers are able to uphold 592 to 593 as a new area of demand, then the daily 10 SMA can catch up and eventually give us that bullish crossover over the daily 21 SMA. All right, but again, make sure you guys remember that warning that I've just given you guys from these two technical indications, from volume and from the current lower lows and lower high price trend. All right, so with all of this in mind, let's take a look at our first and last official swing trade idea for this short trading week. Ticker symbol ARM, or ARM Holdings. So this is a semiconductor name, and I want to take a look at this on the weekly time frame first, because, well, on the weekly time frame, we have what we like to call a price discovery phase or mode that this stock is currently going through. And again, ARM has been a recent IPO. Yes, it IPO'd back in early to mid-September of 2023, but that's still very early, right? And it hasn't officially been 2 years just yet. It's been over a year. And for me, whenever we do see these early stocks, these IPOs that have yet to see 3 years worth of price action, or at least 5 years worth of price action, to me, if it's less than 3 years, it's a pretty young stock, right? There isn't a lot of history to go back off of. But what I like about ARM specifically is that there is actually very, very good levels due to the fact that it had that regular type of, quote unquote regular type of volatility that we usually get from an IPO. And thanks to this volatility, we are actually getting some very solid, significant horizontal levels that you see here. All right, so we have a major level on the weekly time frame at 116, another one at 136, and another one at 150, and another one at 173, and obviously all the ones down here. But we're going to be focusing on the levels up here since the price is currently consolidating around here, right? So what I'm trying to point at is that with this volatility, we're now past that IPO volatility, and in fact, we're in that quote-unquote price discovery phase or mode. And how do we know that? Well, the price has lost its volatile oscillations, and in fact, it is now forming a very nice chart pattern, what we like to call a textbook macro wedge chart pattern. So we see it here formed by this descending resistance trend line and this ascending support trend line, right? So with this wedge chart pattern, it is usually a neutral chart pattern, which means the price can break up to the upside or it can break to the downside. Now here's the thing with wedges, it can be very, very tricky because there can be fake outs in both of the breakouts, either to the upside or to the downside, which means, for example, since we're looking for this on the long side this week, if you do see a breakout earlier in this week, the price can immediately come right back down and goes right back into the wedge chart pattern, and eventually in the next couple of days or even weeks, ARM can now break to the downside and it can have an official downtrend. And that's what I mean by a complete fake out, right? And so this is what happens when we're dealing with a neutral chart pattern. Yes, it can give us two different opportunities, but it can also, while giving you two different opportunities, it can give you a fake out where it can look like it's breaking up to the upside and then give us an official big breakdown to the downside, and vice versa. Okay, so we need to watch out for these fake outs on these neutral chart patterns like the wedge. So based on this tightening or dampening of this volatility that we've seen since its IPO days, we're starting to see some very, very good RSI here and momentum, right? So with the relative strength index, after seeing some very wild moves, being very, very overbought, obviously, since ARM has had such a rapid increase from its opening price, we're now coming back to a more quote-unquote calm, sea of calmness for ARM here. And the RSI has now recalibrated back towards the more optimal levels on the weekly time frame, ranging from 50 to around 57, which also gives us an idea how strong ARM is while it's consolidating or during its price discovery phase or mode. And so this leads me to believe that there's still a lot more relative strength left on the higher time frame here, on the weekly time frame, and there's still a lot more room left for growth share price wise, right, to the upside. So with this wedge chart pattern, I truly believe that we can still be very much biased to the long side. But again, we need to watch out for that potential fake out where the price can come back right back down to the wedge, continue to consolidate, and eventually a few weeks down the line or even a few days down the line, you can see a rapid break to the downside, right? And a new downtrend can occur after weeks and months of consolidating to form this wedge chart pattern, right? So now, lastly, before I move into the daily time frame, the weekly looks really amazing because as the price has continued to make this wedge chart pattern, the price has been able to uphold the recently formed weekly 50 SMA, this dark blue line. And on top of that, last week, we have yet again, for the third time, officially closed over the weekly 21 and the weekly 10 SMA and the weekly 50 SMA. And I'm saying it's the third time because we have also retested this descending resistance trendline for the third time, right? And again, usually after the third retest, on the fourth one, we do tend to see a breakout out of that level, whether it be a level of support or level of resistance, breaking out, right? After that third retest. So, we had instances here, right? There's the first retest and then the second one here, right? And then obviously the third one is last week's high, right? So all these three different incidents here of retesting this descending resistance trend line has allowed the price to stay over all of these three major SMAs on the weekly time frame. So again, the weekly looks very biased to the upside so far, right? And the RSI is also confirming that, hey, the overall relative strength of the price action is staying strong. So there's a higher probability of the price breaking out to the upside. All we need to watch out for is a potential fake out. So with all that in mind, if we take a look on the daily time frame now, right, there is a little bit more caution that we need to take for at least tomorrow, maybe even into Wednesday, okay? Because, well, we did end up with a doji candlestick last Friday, and usually we like to consider this a gravestone doji, but I wouldn't call it that since there is a significant lower wick here, a bottom wick, but this is an undecisive candlestick on a daily time frame, and it came in right at this 150 horizontal level, which is almost converging at this descending resistance level that forms that macro textbook wedge chart pattern. So in this case here, I would say that we need to see a potential move lower again, maybe tomorrow or even Wednesday for another retest at this daily 10 SMA as it continues to catch up, which will allow my daily 21 SMA, which is kind of flatlining, even though there are signs that I want to curl up higher, to finally try to catch up to the price after the price pivoted away on a nice dragonfly doji on this hand here, on this low point at the 136 level, and eventually see the itself just try to catch up to the price right after the price reclaimed it and rapidly moved away from it, supported by the shorter daily 10 SMA here, right? So for us here, again, we just need to see a nice pullback around the daily 10 SMA, which will be around 144. So there could be a possible bounce entry at 144. However, I really don't want to be involved in ARM. If it decides to move back lower, maybe it might move back down to 136, maybe even lower to try to retest at the ascending support trend line. So that is the reason why I gave you guys the official breakout entry point over 152.10, because at that point we will be over both of the horizontal resistance level sitting at $150 and over this descending resistance trendline, which again will be over the overall macro wedge chart pattern. Okay, so over 152 is also over last week's highs of 151.60. So that will give us another confirmed entry point for an upside breakout out of this wedge chart pattern. All right, so again, the 3-point game plan with the entry, stop losses, and of course the price targets are all in the report itself, along with the specific option contracts and strategies that I wrote for ARM is also in the report as well. So make sure you guys read the entire report along with ARM's full analysis to understand why we are trying to long this ticker this week and possibly into next week as well, as if we do get a position this week. Alright, so that is it for this video. If this technical analysis video was insightful and most importantly applicable, make sure you hit that like button down below. And if you're new here and you aren't subscribed to the channel, make sure you hit that subscribe button as well. Also, if you are watching this video when it just became public and you would like to watch this video a day earlier when it's private, the only thing that you need to do is become one of the many readers of the CFO Swinger Watch Report, which will also automatically give you full access to the private CFO Discord community where you can expedite and further your learning and trading. Okay, so I'm offering a 50% off for your first 30 days. It's a first come first serve basis. So all you need to do is DM me on Instagram at chartsfocus1 to claim your spot. Again, all of this will be very helpful for you to especially expedite and further your learning in trading, right? So if that's you, and if you want to do that, make sure you guys DM me on Instagram at chartsfocus1 to claim your spot for 50% off for your first 30 days. All right, good luck, and I'll see you all tomorrow morning.